Hi, good evening, friends. Welcome to Konexio Technical Insight. I am Rahul Randeria. I will be hosting the show today. I am an independent market expert, and we would be discussing about the weekly trends and setups and micro markets for the coming days and weeks. So definitely, we will start with USD INR. On the daily charts, USD INR has formed a classical pattern, which is known as an ending diagonal pattern in the last couple of months. Now, on the daily charts, we can see that USD INR has made a low of 77.416, and prior to that, it has been forming an ending diagonal pattern. Currently, it is trading near 73.30, and it is just near its support line. Once it trades below 73 mark, Rupee might get stronger and stronger in coming months and quarters. So the potential target of this particular ending diagonal pattern is coming around 68 to 69. Maybe it will take 6 to 8 months. Now, one more important point which I would like to highlight: whenever FIIs or FPIs or P note or ETFs enters the market, they have to buy Indian rupees after selling the dollars. So now the important point which I would like to highlight is that when the FIs have entered the market, when the USD INR was around 75, 76 or 77, and now the USD INR is getting stronger and stronger, and it is quoting near 73.30 marks. So now, even though the prices and the indices are going up, the valuation of the FI investment are getting lower. I mean to say, they might be incurring losses, or they might be they're holding their value on the neutral basis. So definitely, once USD INR starts getting stronger from the levels of 73 to 72 to 50, the foreign investors might start getting negative returns from the investment of equities in the Indian markets. So that might trigger sell-off in the Indian markets in the foreseeable future. This is just an observation, but we will discuss in the future course of time. Now, I would like to discuss again in the context of USD INR. If USD INR is getting stronger and stronger, the two major indices which might be impacted on the negative eyes would be the IT sector and the pharma sector. So, and even at current levels, both the indices have rallied very sharply, very decently, and the risk reward is not matching. So I would be recommending to stay cautious in IT and pharma. Now let us discuss the daily charts of the Nifty. Nifty has formed an engulfing bearish pattern on the daily charts, and on Friday it has formed a high wave candle where the trend was indecisive. Again, after an engulfing bearish pattern, we might see selling pressure coming in Nifty if there is a counter rally or a sharp or a minor pullback. Now, if we look at on the daily charts, again in August, September, similar pattern was formed, an engulfing bearish pattern, and then we have seen a 1,000-point correction from the highs of August high, which was around 11,800 mark. Nifty corrected towards the level of 10,800 mark. It took the support around 10,800, and in just 10 days, Nifty again rallied towards the level of 12,000 mark, which is a psychological barrier. Now, if we look at on the RSI, a blue horizontal line, which clearly indicates the markets, whenever the markets have entered into overbought territory, multiple times, 4 to 5 times, Nifty has corrected from that particular overbought territory. And currently also we have indicated that Nifty had seen a sell-off on Thursday. So definitely it indicates that we might see some sort of selling pressure coming in Nifty at the higher levels. Now we would discuss the crucial support in the Nifty for the coming weeks, for the coming week. The important support in the Nifty is coming around 11,500, which is spot levels. If it breaks, then next support is coming around 11,300. On the upside, the major resistance is coming around 11,900, and if it breaks, then next resistance is around 12,025 mark, which was the recent intermediate intermediate high. So definitely it is getting cautious, and some sort of exhaustion is also seen on the daily charts. Now, if we talk about Bank Nifty, again, the Bank Nifty on the daily charts has seen a breakout from a rising channel, and it is near the crucial support. Bank Nifty has also rallied 3,500 points in the last 10 to 12 trading sessions. Again, it is entering into overbought territory. The prices are getting heavier, and again we have seen some sort of profit booking in the banking stock also. So definitely, I would recommend to stay cautious in Bank Nifty as well as the banking stocks. Now, the crucial support in the Bank Nifty is coming around 22,970, which is a spot mark, a spot levels. And if it breaks, then the next crucial support would be coming around 22,500 mark. On the upside, the major resistance is around 24,000, which is a psychological barrier. And if it breaks, then the next resistance, which is around 24,500 mark. So clearly, the trend which indicates the strategy should be sell on rallies mark. Now, uh, we would like to discuss on the derivative data, where the major concentration of the calls and puts in the Nifty and Bank Nifty has been seen in the past week. Now, if we look in the Nifty, the major concentration of the position has been seen in Nifty calls, which is around 11,900 mark, and next concentration is around 12,000 mark. So definitely the psychological mark, which is 12,000, could act as a stiff resistance, and we might see selling pressure in the coming week. On the downside, I mean to say, on the put side, the major concentration is been seen in around 11,500, as we can see on the screen, and 11,400 mark. So this could act as a support, and which is again coinciding with our Nifty 100 has been seen. Now in Bank Nifty, the major position which is built and is seen uh, on the Bank Nifty calls are on the upside 24,000, which has seen as the major concentration of the position built up in the calls, as we can see on the screen. And the second level where the major concentration of the call is been seen around 24,500 mark. Again, on the put side, the major position is been seen at the money put, which is 23,500. And once Bank Nifty trades below 23,500, it can drift down to the lower levels. On the downside, the next position, which is built in Bank Nifty puts, is around 23,000 mark. So definitely 23,000 mark can again act as a crucial support, and if it breaks, then Bank Nifty can drift down to the levels of 22,500 mark. So these were the setups and the indicators which we have seen in Nifty, Bank Nifty, and USD INR. Now, the next important thing which I would like to highlight is the CNX IT index. CNX IT index from the March lows has rallied very sharply. The March lows were around 11,000 mark, and the recent highs was seen around 22,000 mark. So a thousand point rally, or almost we can see the IT index has almost doubled from its March lows. Again, the pattern which I have see highlighted in this red circle is clearly indicating some sort of topish kind of indication happening in the BSC CNX IT index. RSI is also into highly overbought territory, and as we have indicated, the USD INR is seen as forming an ending diagonal pattern, and it might get stronger and stronger in the coming weeks, coming months, which can put pressure on the IT sector. That means IT index might come under pressure, and IT stocks might under pressure. So definitely, I would just like to highlight some points. IT stocks such as Wipro, Infosys, TCS, Mindtree, Tech Mahindra, HCL Tech, almost all these stocks from the March lows has doubled from this particular lows. So again, the prices have entered into highly over territory, and I see some sort of topping out formation in IT index. We might see 30% or 25% correction in the individual stocks, and again maybe 20-25% correction in IT index for the next couple of months. So definitely the risk reward is not matching in IT. One should try to book profits, avoid longs, and stay cautious in IT index. Again, the next important index which I would like to discuss is CNX MidCap 100 index, which is indicating some sort of distribution pattern, and we might see some sort of selling pressure or profit booking coming in at the higher levels. Now, on the daily charts of CNS MidCap 100, again in February, March, and April, similar distribution pattern was seen. The first red circle, which has indicated that rounding top was formed, and it was quoting around 18,000 mark. And after that distribution, we have seen a sharp sell-off in the CNX Midcap 100 index. It went down to the levels of almost 11,000 mark in the March. Again, from the March lows, it has rallied significantly, sharply. Again, it is quoting around 17,500 mark, and it has started showing distribution pattern on the daily charts. Similar pattern which was formed in April, March and April. So again, I would like to indicate and I would like to suggest that one needs to be caution in mid-cap stocks and mid-cap index. Again, we might see a correction in the coming months. So definitely it is a caution in CNX IT and mid-cap index. Now I have identified two particular stocks which are one is looking strong and one is looking weak. First of all, I would like to discuss the weak stock, which is Reliance Industry. On the daily charts, Reliance Industries has broken out from a rising channel pattern, and currently it has broken the crucial support of the rising channel. On the volume front, if you can see the red downward falling line, the volumes are getting lower and lower, and on the RSI also it is showing some sort of negative divergence. So definitely Reliance might see some sort of profit booking at the higher levels. So anyone who has already invested in Reliance is getting profits should try to book profits at the higher levels. One should stay cautious, and looking at the pattern, even the equidistant pattern of this rising channel indicates that Reliance might get stable around 1800 to 1750 marks in next 4 to 5 months. So definitely one needs to be get cautious at the higher levels in Reliance Industries. Now the final stock which I have indicated, which I have identified, which is looking bullish from the current levels is JSW Steel. The stock has given a classical breakout from a flag pattern formation. Again, on the volume front, the volume is at the highest level of the last couple of days. The stock has given a classical breakout, a very bullish candle on the daily charts. Any pullback in JSW Steel should be used as a buying opportunity at the lower levels. On the upside, the potential target of JSW Steel in next 2 to 3 months is coming around 360 to 370. So any investor or swing traders who would like to chip in the stock could enter at the lower levels in JSW Steel. So definitely any correction should be used as a buying opportunity in this particular stock. So thank you very much for viewing our show. You can give your suggestions in our comment box, and I would recommend again to stay cautious, have light positions, and have a nice trading week. And thank you very much, and we might see into next week.